Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda. India strikes a defiant tone over President Trump's threat to ramp up tariffs over Russian oil purchases. It says the US and Europe are also buying energy from Moscow. And investors go all in as tech stocks and dip buying power the S&P 500 to its biggest rally since May. Plus, oil majors Aramco and BP report earnings. We'll also bring you results from Infineon and Continental later this hour. Well, we kick off the show from the front line of the tariff war, the logistics sector, and some breaking earnings from Deutsche Post. We have second quarter revenue coming in at 19.83 billion euros. The estimate was for 20.97 billion euros, so a miss there. And when you look at Ebit, you've got it coming in at 1.43 billion euros. The estimate was for 1.33 billion euros. So actually a beat when it comes to that. We'll compare this to the Maersk earnings later in the week on Thursday, but we have plenty of other earnings to bring you throughout the programme as well, not least from Aramco and Infineon. But let's check in on these broader markets as well, because all of that bad news on Friday finally turned into good news yesterday. You saw the S&P powering to its best rally since May yesterday, and the optimism continuing, as you can see, in the Asia session this morning. Futures pointing higher on both sides of the Atlantic as well. Now you had Mary Daly flowing a bit of fuel on that fire yesterday with a bit of dovish Fed speak. And if you flip the board over to the cross-asset picture, you've got traders now pricing in a 95% chance of a September Fed cut. So you've got gold on the optimism, pretty steady right now at $3,370 a troy ounce. Bit of a drop now. The 10-year at 420, but look at euro dollar, 115, and Brent here at $68 a barrel. Now this, of course, ties in to what's happening with Indian imports of Russian oil. Let's dive into that story next. President Donald Trump ramping up his threats that the US is going to raise tariffs on Indian exports over its purchases of Russian oil. India's foreign ministry calling the move unjustified and unreasonable, and saying that its energy imports are a necessity as the fight between the two major economies escalates. For more, I'm pleased to say we're joined by Bloomberg's Ruchi Bhatia out of New Delhi. And Ruchi, what do we know about what these tariffs could look like, and also the current sticking points in that US-India trade talk?
Well, it did seem like at one point of time that New Delhi and Washington shared very close relations and very warm relations, and that would result into a trade deal. But forget a trade deal. We are now, facing, a massive tirade from U.S. President Donald Trump, where he hit out at the South Asian nation for its purchase of Russian oil. While India has remained pretty defiant so far, remember, this tirade is not something that a lot of officials were expecting. And in fact, one of the persons who I spoke with almost called it a verbal slap of sorts. So the Indian officials, in fact, now finding it very difficult. This is a very atypical diplomatic situation, so to say. And while India has been calling, Trump's tirade unjustified and unreasonable, and citing India's massive demand for energy needs as a reason for why it buys Russian oil, one has to take into account the fact that from here on, it does look like the relationship between the two countries, between India and US, is not what one had anticipated. It has certainly worsened, and that is going to make the lives of Indian officials even more difficult. It is becoming even more harder by the day to deal with the Trump administration, and especially in a situation like that where there is a trade deal, there are trade deal talks that are underway, and on top of it, you have to now justify as to why you're buying, Russian oil as well.
Yeah, a massive turn of events for Modi and his team. But in terms of the economic consequences, Ruchi, back in India, what are the odds that this tariff shock tempts the RBI, the Reserve Bank of India, into a rate cut tomorrow?
So the expectation, was after the last June rate cut, which was larger than expected one with a 50 basis point cut coming in from the central bank. The expectation was that there's going to be a pause in August. But since then, we have seen how inflation has eased to more than a 6-year low. And on top of it, you have Donald Trump, who's imposed a 25% tariff on India and an undefined penalty for buying Russian oil. And many analysts say that this is going to take a knock on the Indian government growth estimates. The RBI was expecting a growth of 6.5% for the current fiscal year. And it does look like that we will see about almost about 30 basis points getting shaved off because of the impact of slowing growth and Trump tariffs as well. And that would mean that now many analysts are saying that ahead of the festive season, there is a need for another quarter point cut to prop up the South Asian economy so that we're able to brace for any kind of an impact. There are also local media reports where they're talking about some sort of export package for exporters, some sort of an incentive package for them to be able to weather the storm. So let's see how this plays out. But having said that, tomorrow's policy and any kind of commentary that comes in from Governor Malhotra will be an important one to watch out for.
All right, we will look forward to that. Bloomberg's Ruchi Bhatia, we thank you for your coverage, and we look forward to that decision tomorrow. Now, staying with the tariff story, the Swiss government says that it's determined to win over the US on trade after last week's shock announcement of 39% tariffs on its exports to America. Bloomberg's Balázs Pence joins me now for more. Balázs, what's the President and Finance Minister Karin Keller-Sutter likely to be putting on the table if she heads to Washington?
Well, the Swiss are in a very difficult situation. It's not a stretch to say that they were blindsided by the 39% tariff announcement. And it seems like the U.S. is most focused on the Swiss trade surplus in their bilateral relationship. Now, just as a reminder, a lot of that surplus comes from the sales of refined gold, from watches, from chocolate, from pharmaceuticals being a large component. But the Swiss have already stressed that they dropped their tariffs on U.S. imports to Switzerland to 0% last year. So there's not a lot they can do there. So what can they do? They can follow the blueprint that other countries have used to have more successful negotiations with the U.S. And what we've seen there has been a combination of things, starting with purchases in areas like defense and potentially energy. There's talk about potentially Switzerland buying more LNG from the U.S. And the other component has been large investment commitments that we have seen from the EU, from Japan, from Korea. The Swiss can try to increase their offer in that arena as well. We'll see whether that will be enough.
So, Balázs, while you've got countries like Switzerland scrambling to seal these deals, of course, we're approaching the implementation date for Trump's tariffs. What do we know about how all this is going to work logistically?
Right. So we are now in this what's called the breathing period before the tariffs kick in on August 8th. Once that happens, so just to recap, how it works is once a product is shipped into the United States, the company, the seller, or an intermediary like a customs broker has to pay a tariff. The agency tasked with collecting that tariff is the US CPB, whose agents around the country at all ports of entry, whether air, sea, or land, they will be reviewing paperwork, doing inspections, assessing the necessity to collect payment or impose penalties. One thing that they will be very much focused on as soon as the deadline kicks in is what they call transshipments, when the products are shipped through another country to try to lower the tariff rate. If they see that happening, that will incur a higher penalty, a 40% penalty just for transshipments. Now, obviously, this is going to be a very difficult undertaking, but one thing is for sure, on August 8th, we're entering a brand new era of global trade.
All right, Balash Pence, we thank you so much for that update as we approach that crucial deadline. Now, back in the markets, a fresh round of dip buying helped push the S&P to its biggest rally since May yesterday. Let's get more with Bloomberg's Valerie Teitel. Val, you've got some doubts about how long this can last from the likes of Deutsche and Morgan Stanley.
Well, look, it is pretty incredible, the fact you have a hawkish Powell and then a very weak payroll print. And over the last 3 sessions, we're now trading flat on the S&P 500. Yesterday's rally more than outweighed the hit from weak payrolls on Friday, and we're now just trading down just a fraction since Friday's open. A lot of this has to do, though, with this boom from AI. A lot of what drove the rally yesterday was mega cap tech. We also had some AI names trading really strongly, and it doesn't end there. We also had some after-hours earnings from Palantir. This is the software firm that uses AI. It's leveraged to the defense space. The CEO saying that AI is having an astonishing impact on its revenue, and Palantir after hours up over 5.5%. So maybe this equity rally is telling us that the dip is going to be bought because the boom from AI is more going to outweigh any negative impact to the U.S. economy from Trump tariffs. It was also helped by the sustained rally in the front end, Lizzie. This is a trade that has not retraced since Friday's move. We're still holding where we are on those 2-year yields, and that odds for September rate cut is creeping up just slightly in the overnight session. We're now standing above 90% for the odds of that Fed rate cut in September. We also had an interesting comment out from Mary Daly. She's the San Francisco Fed president, saying that the market might need more than 2 cuts and the labor market is softening. So there is a dovish tilt from a Fed speaker after that Friday's payroll, and that's leading the front end to really hold on to those gains. We're now down 26 basis points over the last 6 sessions in the 2-year yield.
The dovish camp grows. Bloomberg's Valerie Teitel, we thank you for that update. And Val mentioned some of the earnings that we've already had. We've got plenty left on the docket. It's quite quiet this week, it has to be said, when it comes to the economic calendar. But later on today, we get BP earnings. That's at 7 a.m. London time. Then at 3 p.m., we get the US ISM services numbers, as Val was previewing. And then after market, it's those all-important AMD earnings. The chipmaker, of course, expected to benefit from the easing of US curbs on its exports. You've got healthy demand from growing cloud investment as well, and maybe a rebound in China sales. So we look forward to those earnings as well. You can get a roundup of the stories that you need to know to get your day going in today's edition of Daybreak. Terminal subscribers can go to D8YB Go to find that. But coming up on the programme, we're going to delve into what investors are looking out for when the oil majors BP and Saudi Aramco report today. So that's coming up next. This is Bloomberg.
A Bank of England rate cut is back on the cards this month after a pause in June in a divided vote. And markets will be listening to Governor Andrew Bailey for clues on the path ahead as the UK economy cools and uncertainty lingers.
Interest rates are not on autopilot. They cannot be.
Tune into Bloomberg for live coverage of the BOE decision and press conference. It all starts Thursday at 12:30 p.m. on Bloomberg. Context changes everything.
It's just gone 6:15 a.m. here in London. Welcome back to Bloomberg Daybreak Europe if you're just joining us. And we dive back into the earnings story. The oil giants Saudi Aramco and BP due to post their earnings later amid a renewed focus on crude prices after OPEC Plus agreed to raise production quotas to a 2-year high. Saudi Aramco shares are at the worst performing among the global oil majors, slumping 14%, while Western peers have seen a rebound in their stock prices. Joining us now from Dubai is our Middle East energy markets reporter Anthony De Paula. Anthony, good morning to you. Just talk us through how much lower oil prices are expected to weigh on Aramco's earnings when they're also, of course, ramping up production.
Good morning, Lizzie. Yeah, exactly. It is the low oil prices that is expected to bring down the profit in the second quarter. Aramco did produce a little bit more in June, even going over their OPEC quota. That's basically because of the war between Iran and Israel. When Aramco ramped up and tried to get some more oil out of the Gulf, in case the Strait of Hormuz was closed, which of course didn't happen. The OPEC Plus is increasing production, but the bulk of that is going to come this month in August and next month in September, as OPEC Plus brings on the bulk of their production and unwinds the first tranche of production cuts by the end of September. So that's going to be a little bit of a delayed impact for Aramco, that the bulk of that production coming on. So we're not expecting to see a huge advantage for them of added production in the second quarter results, because that's going to be countered by the lower oil prices. So prices in the second quarter are about $20 less than they were in the same quarter a year ago, and the average price is also about $10 lower than it was in the first quarter. So we have seen prices go down in the second quarter, and that's going to weigh on the earnings. Of course, what we're looking for with Aramco as well is any kind of additional information about that massive dividend they have. They have a huge dividend, industry beating over $21 billion a quarter. Of course, with the free cash flow struggling to keep up with that, they are going to be building debt. So we're going to be looking for any kind of details about that dividend, and also about capital expenditure going forward, because, as you said, they are trailing their industry peers, and that's in part because of kind of immediate term growth as companies like BP, like Exxon, ramp up production kind of in the immediate term, Lizzie.
Well, yeah, you take me to BP. Of course, they have the same backdrop of lower oil prices. But what's unique to them, Anthony, is this strategic reset. They've also got pressure reportedly from the activist investor Elliott. What specifically should investors be looking out for here?
Yes, also we'll be looking there for an update on that plan, a plan of divestiture of some assets to cut costs and bring in some additional cash. So looking for some updates on that plan. We've seen good news in the last, yesterday really, from BP on the production front. They are starting up some new production in the Gulf of Mexico, and they made a discovery offshore on Brazil. So again, this is kind of that story of those legacy international oil companies that are kind of moving away from those very green and carbon cutting focus that they had from those plans over the past couple of years, which investors really didn't appreciate and didn't value in terms of the shares. They're moving away from that, more into that focus on hydrocarbons, on producing more oil and gas. And so we're seeing BP take steps to move there. Of course, yesterday's news of new production, new discoveries will be good, and we'll want to hear from the company today more about that cost cutting and more about those plans to increase production and get into new areas, Lizzie.
And Auntie, maybe you can tie together the trade and oil stories for us. We were hearing earlier from Rucci about how President Trump's threatening these substantially higher tariffs on Indian exports for buying Russian oil. Is it actually possible to halt those flows, though? Because some analysts don't seem too convinced that it'd do much to the oil price.
Yeah, so there are a lot of factors there. There are the factors whether Russia can get around sanctions or restrictions. Of course, we see Iran, which has been under sanctions for decades, continuing to sell oil through illicit means, through tankers going directly to the buyers, mainly in China. Russia has also been dealing with that in terms of the price cap, and there have been cargoes that have been moving. They've developed this shadow fleet that is able to move cargoes. So the questions are whether, first of all, whether any kind of sanctions or tariffs on buyers would be able to cut that off, and then how much would have to be cut off. So I was reading one analyst report this morning saying that some state-owned Indian refineries have already cut down some production, so that might go some way to kind of mollifying what the Trump administration is looking for. But India is a major producer of diesel, which a lot of it which goes to Europe. And so kind of we've seen that trade develop over the last couple of years, that the Russian crude goes into India and Europe buys back the diesel from India. So the oil market really adapts to obstructions and moves around it. So we've seen that happen already, but this would be another big obstruction if India really is cut off from that Russian crude, and then Europe is left waiting to see where it can find other diesel. Of course, here where I'm sitting in this region, there are a lot of diesel refineries that do already sell a lot into Europe, so they could be called on to do some more. But really, there are many factors that the traders are looking at. You know, what will be the focus of those sanctions or tariffs? Will companies be able to get around them? And how much will there be kind of any kind of waiting period until those come into effect. So we're still waiting to see that, and traders are really balancing that, the added production from OPEC and the possible loss of Russia, which we might learn about later this week. So a real balancing act this week, Lizzie.
All right, well, thanks for tying it all together for us. Anthony De Paula out of Dubai, we thank you so much. And we're going to stay in that region next. Next on the programme, how the US bombing of Iran's nuclear facilities have given the country a strategic advantage that it didn't have before. We'll bring you that story next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, it's been nearly 2 months since the US's bombing of Iran's nuclear facilities, and since the bombing, UN monitors have been unable to account for Iran's uranium stockpiles, giving Iran a strategic advantage that, quite simply, it didn't have before. And joining us now for more is Bloomberg's atomic diplomacy reporter, Jonathan Tyrone, who's been exploring just how things could play out. Jonathan, you've got a fantastic piece on this morning. Just talk us through what we knew about Iran's nuclear stockpiles before the US bombings and what we know now.
Sure. Good morning. Before I get into that, I think it's worth remembering we're on the eve of the 80th anniversary of the Hiroshima bombing tomorrow. And so that's 80 years that we've entered into the atomic age and seen the destruction that nuclear weapons can create. And so the currency of nuclear diplomacy for the last 80 years has been certainty. Unfortunately, what we have right now is ambiguity. The way that we try to account for nuclear material to gram levels in Iran and hundreds of other countries around the world is by sending in IAEA inspectors. It's not a perfect system. They can't go everywhere, but they do keep very good track. They're very good accountants of nuclear material. And so we're now at 56 days past the last date IAEA inspectors were able to verify the location of Iran's nuclear inventory. They were there last time around June 10th. Before the bombings, they were able to determine within 1 week's time if Iran had diverted that nuclear material for non-peaceful purposes. We're now 2 months away from that, and for each additional week, each additional month, the uncertainty, the ambiguity arises around what Iran's plans are with that stockpile.
Well, it's a crucial reminder, and we thank you for it. Your piece on Bloomberg.com gives readers the chance to decide how to progress if they were an inspector, to escalate, negotiate, or wait and see. Is there any good outcome here?
Well, the best outcome is to reduce the amount of ambiguity around the stockpile, and that probably results in some form of compromise at the end. Iran has very consistently stated it's not prepared to back down from its demand for some enrichment on its territory. That was the compromise that was given Iran under the previous deal that the U.S. left in 2018. Short of offering some compromise, it's hard to see a pathway that results in more certainty around Iran's stockpile of uranium. So if the goal is to reduce the ambiguity around what has happened to Iran's stockpile of uranium, then there's probably going to be some compromise necessary.
Yeah, well, it's an incredible piece, and we're so grateful for it. Bloomberg's atomic diplomacy reporter, Jonathan Tyrone, we thank you so much for that analysis. Coming up on the programme, we'll get back to earnings. The German chipmaker Infineon set to report results for its fiscal third quarter. We're going to be speaking with the CFO, Sven Schneider. So don't miss that conversation. It's coming up next as we look at futures pointing higher on both sides of the Atlantic. Stay with us. This is Bloomberg. very good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda. India strikes a defiant tone over President Trump's threat to ramp up tariffs over Russian oil purchases. It says the US and Europe are also buying energy from Moscow. Elsewhere, investors go all in as tech stocks and dip buying power the S&P 500 to its biggest rally since May. Plus, oil majors Aramco and BP report earnings. We'll bring you results as well from Infineon and Continental in just a moment. Well, checking in on these broader markets, and we have futures pointing higher on both sides of the Atlantic. The bad news turning into good news finally for these markets. You had the dip buying yesterday, these bets on Fed cuts ramping up for September, now over 90%. And so that disappointment of Friday's jobs report seeming more and more of a distant memory. You've also seen strength in the Asia session already. The MSCI Pacific Index up 0.7%, and that dovish Fed speak from Mary Daly only adding fuel to the fire. So flip the board over to the cross-asset picture. You can see that you've got the 10-year Treasury yield currently at 4.20, and you've got gold there weaker now. You had seen it gaining on the rate cut optimism, but just dipping into the red. Euro-dollar at a 1.15 handle, and Brent at $68 a barrel. You've seen a three-day drop as President Trump's been ramping up these threats on India for buying Russian crude. Now, let's get straight back to the earnings story. Out of Germany, we've got results from Infineon. Already a slew of its chipmaker peers indicating a recovery underway, but you're looking at fourth quarter revenue forecasts of about 3.9 billion euros, so missing the expectation of 4.02 billion euros. If you look at backwards revenue for third quarter, that is 3.7 billion euros. The expectation was for 3.71 billion euros. So just an ever so slight miss when it comes to that. And we are going to be speaking to the CFO. We'll hear Oliver Crook's conversation with him in just under 10 minutes' time. So you're not going to want to miss that. Staying in Germany, though, we flip focus and go to Continental. Autos and parts again right in the thick of the tariff storm. The question being whether its mitigation measures have offset the tariff impact yet. And what you're seeing is for Continental's second quarter sales to have come in at 9.6 billion euros. The estimate was for 9.78 billion euros. So again, a miss there. And later on in the programme, later in the day, I should say, we're going to be hearing from the CFO of Conti, that's Olaf Schick, on those results. Now, we also got results from Deutsche Post this morning, and we could bring in Bloomberg's Chloe Mallet for more analysis. Chloe, just walk us through this. You've had the beat reported by Deutsche Post for the second quarter, but what are the details under the hood?
Yeah, so actually pretty good results this morning. But if we look at the individual segments, so Post and Parcel Germany actually did really well, and that was expected. That's due to price increases. But if we look at the global forwarding segment, which is the one that's exposed to global trade, to the tariffs, that's doing a little bit less well because of the lower volumes that are coming in. Deutsche Post did manage to reaffirm its guidance because it has mitigated that through cost cutting and because it has quite a diversified business model. We'll get more of that detail when we have Musk later on this week, Musk earnings, and they're more exposed to trans-Pacific trade, so they have this issue of lower volumes translating into then lower earnings. So we'll get a bit more detail on that and how the global shipping sector is actually holding up.
OK, so we wait for that on Thursday. In the meantime, in just under half an hour, we get Diageo. How are tariffs expected to have affected them?
Yeah, so tariffs are going to be a big part of the story. So for them to do well, there's two things that analysts are looking for: whether or not they manage to sell the inventory to customers before tariffs, and then also if they manage to sell these premium brands to consumers. So that's something that's affected other drinks companies where they've seen weaker consumer spending. So we expect actually quite cautious guidance from Diageo this morning on the back of the tariffs, that weak consumer spending, and also currency headwinds. So we'll be looking out for that this morning.
All right, you're a busy woman, Chloe Mallet. We thank you so much for that. And staying with corporate news, we turn now to Tesla, which has approved an interim stock award worth about $30 billion for CEO Elon Musk to keep his attention on the automaker. Now, the massive payout comes as a legal fight over a 2018 pay package drags on in the background. For more, let's bring in our transport reporter, Danny Lee. Morning, Danny. Just talk us through the purpose of this pay package, apart from keeping Elon Musk's eyes on the wheel.
Hey, good morning, Lizzie. So this pay package, or this interim award worth $30 billion, is designed to make Elon Musk stay at Tesla. So this is very important to the board, to investors, at a time when they've been seeing a fall in sales, a falling share price, and Elon Musk has had his attention in all many directions. So this also partly stems back to that 2018 pay package, which was shot down by the courts. So this is something that will make Elon Musk a little bit more whole, according to the board. A deal is what they said in giving this interim pay package. And for the world's richest person, already worth $350 billion, this is a nice top up to already what he is worth.
Nothing like $30 billion to focus the mind, is there, Danny? But look, this is at a time when Tesla's China shipments are falling.
Yeah, the Tesla China shipments, on Monday came in lighter, and this is a kind of a proxy for overall performance at Tesla, because the Shanghai factory churns out more cars, more EVs for Tesla than any other around the world, and it continued to see a slippage. The 6th and 7th month we've seen a decline. So this does just reflect not just Tesla's own performance, but especially in China, the world's biggest EV market. There is a competitive struggle underway, and the likes of the bigger players like Tesla and BYD have been struggling. But no, for Elon Musk, who's decided to take greater control of sales to try and revive and turn around Tesla, that pay package will come into a broader focus, and for him, maybe focus the mind as he really extends that turnaround in the years to come.
All right, Bloomberg's Asia Transport reporter Danny Lee, thank you so much, as always. Now, let's get you to some other stories making news around the world. The governor of Texas has ordered the arrest of Democratic lawmakers after they left the state in an effort to block the controversial vote on new electoral boundaries. Democrats say that the maps are being redrawn to give Republicans more seats in Congress. The governor of New York threatens to retaliate by doing the same for Democrats.
If Republicans are willing to rewrite these rules to give themselves an advantage, then they're leaving us no choice. We must do the same. There's a phrase, you have to fight fire with fire. That is a true statement of how we're feeling right now.
Elsewhere, Brazil's former president, Jair Bolsonaro, has been ordered into a house arrest for defying a ban on using social media while standing trial over an alleged coup attempt. A Supreme Court justice signed the order on Monday after Bolsonaro's supporters staged rallies across Brazil. The judge said that Bolsonaro acted illicitly by addressing the demonstrators over social media. And Bloomberg has learned that Chilean copper giant Codelco has just days of ore stocks remaining at its giant El Teniente mine. Underground activities have been halted since a deadly collapse on July 31st, which killed 6 miners, leading to the use of stockpiles to continue operations. The incident is likely to place further stress on the market for the metal. Well, we just have some breaking earnings to bring you from Aramco out of Saudi Arabia. Of course, the backdrop being lower oil prices in the second quarter. They've ramped up output in June, exceeding the OPEC plus quota, according to the International Energy Agency. But what you've seen for the second quarter net income is a number of 85.63 billion rial. The estimate was for 89.34 billion rial. So not a good number for them. It seems that they were not able really to cushion the impact of these weaker crude prices, but they say that the market fundamentals do remain strong. They're saying that the performance-linked dividend is $200 million. The base dividend, $21.1 billion. Operating profit for the second quarter is 167.09 billion rial. The estimate was for 180.4 billion rial. So not the best set of results there out of Saudi Arabia for Aramco right there. We also need to just look to the Infineon earnings that we got earlier on in the hour out of Germany, and we can bring you an interview now with the CFO of Infineon, who's been speaking to Bloomberg's Oliver Crook. That conversation with Sven Schneider off the back of their flat sales in the current fiscal quarter.
Last quarter, we were the only ones really going out and saying we do not know it, we do not see it in our order intake and in our numbers, but if the world is increasing tariffs, then there must be some negative impact to growth and to investments, and that's why we said we guesstimate a 400 million revenue hit in this fiscal quarter. Now, from today's perspective, unfortunately, I can only reiterate, we don't see it in our numbers. We do not have very clear evidence. Our customers do not tell us if they push out or pull in. They very much drive on site, very much so also in the automotive business, which is give or take half of our revenue. But I would say from today's perspective, the indirect tariff guesstimate for this fiscal quarter is probably less pronounced than we thought last quarter. On the other hand, we are faced with more and more negative currency headwinds from the weakening dollar, which offsets to a certain extent.
And as you say, the automotive sector, that's just about more than half of your revenue. There's been sort of data from the June numbers in Europe. We saw car sales in Europe down dramatically, down 7%. A lot of concern going forward in terms of demand for automobiles. What is your outlook for the auto sector? Is this going to be a place of weakness for the coming quarters, or is this something that you actually see as stabilizing?
Yeah, so first of all, Oliver, I have to say that this quarter, I'm in the fortunate position all my peers usually are in. I'm only guiding the current quarter. I'm sorry. You need to stay tuned for the full fiscal 26 guidance, which we will give in November. But to answer your question, despite that disclaimer, I would say for us, first of all, automotive is a global market. Yes, there are regions, but we enjoy in all 5 major regions either number 1 or number 2 positions. So there's diversification. Number 2, for us, automotive is not so much the car production number, it's the content per car, it's the electrification, it's the software-defined vehicles which play into our favor. Therefore, for example, in China, we are still enjoying a very healthy growth both on xEV and on ADAS. In other markets, as you rightly say, for example, US, there's a deceleration of the electrification. In Europe, it's a mixed bag. We also see in some markets the renaissance of hybrids, where we also have a high content. So there are very different dynamics. So for this quarter, we expect automotive to grow slightly again quarter over quarter.
And you feed not only the automotive sector, but you also feed the AI ecosystem, data centers across the world. What are you seeing there in the next quarter?
And that's a very positive development. And here I'm deviating from my statement because we have already given the guidance for AI data centers for the next fiscal year. So I'm happy to reiterate this year we will double our revenue to around 600 million. That's AI data center only. Next year we expect to grow that to 1 billion. And why is that possible? It's possible because we are designed in with all major hyperscalers, with all major power processor makers. And there was an interesting, I would say, piece of news coming out last quarter. We also announced a new infrastructure cooperation with NVIDIA, where we are working on a totally new power to grid connection, which will be an 800 volt DC connection from the grid directly to the server. That is nothing for 26, it's beyond, but that just shows how well we are positioned in that important market.
So that was the Infineon CFO speaking to our very own Oliver Crook. And coming up, we're going to stick with the chip story. The US saying that it's considering using tracking technology to keep tabs on high-tech semiconductors. We'll bring you that story next. This is Bloomberg.
Earnings season is here.
The focus is on the European earnings space.
A busy week of corporate earnings.
We're going to be deeply into a lot of these earnings stories.
Bloomberg is first to break the numbers.
Santander, Caixa, Soc Gen,
Deutsche Bank, HSBC, BBVA.
A slew of bank earnings already out.
With the smartest insights.
There is an earnings revolution going on.
Markets are going to be driven more by earnings.
It looks like the worst is behind us.
Continuing coverage on Bloomberg. Context changes everything.
Welcome back to Bloomberg Daybreak Europe. Now let's recap some of the key earnings that we got overnight. Palantir shares jumping in late trading after it posted a 48% increase in second quarter revenue, which rose to more than $1 billion. Now the data software firm is citing what it calls the astonishing impact of AI tools on its business. Palantir also raising its revenue outlook for the year to more than $4 billion, beating Wall Street estimates. Now, let's stay in the US and stay with the tech story. The White House's head of science and technology telling Bloomberg that the US is looking at fitting chips with better location tracking. Michael Kratsios says that it's part of a broader plan to curtail smuggling and maintain American technological dominance.
I think the message that we want to bring here is less about export controls and more about export promotion. The third pillar of President Trump's AI action plan, which we unveiled on July 23rd, is all about creating full-stack AI packages that we want to share with the world. And APEC is the first place we're going out to share that message. The United States has the best chips, it has the best models, and it has the best applications. And what we're going to be working on over the next few months is putting together American AI full-stack packages and trying to export those out to lots of countries around the world. That's the message we're bringing here, that the American AI industry is open for business.
It's hard to talk about APEC without focusing on China, because that's where the beef is between the U.S. and China, Michael. I mean, when it comes to its approach to China, might we still see a blanket ban at some point in time?
I think right now there's already a set of export controls around our highest end chips, and I think that's the current status quo. I think most of the discussion between China and the U.S. At this particular ministerial was more around AI governance. And the Chinese at a conference in Shanghai last week unveiled their action plan, and it focused a lot on global AI governance. And that's something that the U.S. takes a different position on. We believe that each country should be able to set their own destiny on the way that they think about regulating artificial intelligence. And we believe that the U.S. model, one that puts innovation first, is going to be the most attractive model for most countries around the world. So those are the types of conversations that were mostly discussed in the ministerial yesterday.
As much as the U.S. takes issue with China, China's taking issue as well. In fact, it says that NVIDIA chips are a security vulnerability for the country. What's your take? What's your response to that?
I think for us right now, the three highest-end NVIDIA chips are currently export-controlled, and the H20 chip that made a lot of news is one that any buyer in China will have to file for a license to buy it with our Commerce Department. So the Commerce Department will continue to go through the analysis of weighing the cost-benefits of that particular sale. So in some ways, it's a marked difference from the way that the Biden administration thought about those chips, which essentially allowed them to flow freely into China.
Has there been any concern or evidence about smuggling of NVIDIA chips into China? Has that come up in some of these bilateral, multilateral conversations?
That's not something that's come up in this meeting. Obviously, there's been wide-ranging reporting on that particular issue, and there's been an effort by our Commerce Department to step up enforcement, and it's something that we need to continue to do more of. Smuggling is illegal, and we need to make sure that any country around the world that has an export license for a particular chip adheres to that license, and those chips don't end up in places they shouldn't.
So in the same breath, would the U.S. then support location tracking technology to ensure that smuggling doesn't happen?
That's a really great question. In the president's AI action plan, under the third pillar, there is discussion around very important research and development that needs to be done on potentially the types of software or even physical changes you could make to the chips themselves to do better location tracking. And that's something that we're exploring and we explicitly included in the plan.
That was the director of the White House Office of Science and Technology speaking to Haslinda Amin and Heidi Stroud-Watts earlier. Well, I just want to recap those Aramco earnings because they were really quite disappointing. Profit falling for a 10th quarter because of the weak oil price hitting these earnings. But what stands out is the dividend. So we reported earlier that the total dividend was $21.36 billion. But compare that year on year, and it is a 31% drop. So serious disappointment disappointment here for the Saudi oil giant. They have net income attributable to shareholders dropping 19% in the second quarter year-on-year, missing analyst estimates compiled by Bloomberg. But really, this is the latest sign of the strain on Aramco's balance sheet, because earlier this year they'd said that they would lower the dividend for 2025 to about $85 billion, but seemingly struggling still to churn out enough cash to cover the distribution. So that smaller payout, the weaker oil price, cutting into the Saudi government's revenues, just as Crown Prince Mohammed bin Salman pushes ahead with his plans to transform that economy. We've got plenty more coming up. We'll bring you all the charts you need to set up your trading day. So stay with us. This is Bloomberg.
It is leaning towards a cut. If you go back and look at the June summary of economic projections, everybody sees the path of rates is going downward. It's just a question of magnitude and timing. So the degree of disagreement within in the Fed is actually, I think, dramatically overstated, because everybody thinks the next direction of moves is down. Just a question of when to do it and how to manage the inflation risk caused by the higher tariffs.
So that was the former New York Fed president and Bloomberg opinion columnist Bill Dudley speaking there. A matter of when, not if, the Fed is going to cut rates, he would expect. And those expectations of Fed cuts rising yesterday. We're above 90% price now for a September rate cut. And that was partly what was powering the S&P to rally yesterday, more than 1%. But also you had these corporate earnings, and it was the big tech mega caps that were benefiting principally yesterday. But of course, in the background, the tariff uncertainty continues, and if we flip the board over, principally it continues for Switzerland. Of course, they've got that 39% tariff deal. The question is whether they can bring that down. You can see where Switzerland stands in the leaderboard of trade with the US. What is Switzerland prepared to put on the table to get a better deal? It seems that maybe the president is willing to get on a plane and make a more attractive offer to Washington. Flip the board over, and we also have to think about India. The president, Donald Trump, threatening to substantially raise tariffs on India because of the war in Ukraine and its imports of Russian oil. We have that deadline coming on Friday, of course, for Russia to get to a ceasefire with Ukraine, and India very much in the crosshairs, paring back some of its imports of Russian oil. But is it enough to placate the White House? We're going to stay with the oil theme next. An interview with the BP boss coming up on the opening trade. Val Crittianoli will take you all the way to the open. That's next. This is Bloomberg.